Hello everybody and welcome in this video. In this video I'm going to explain to you very simple the difference between a limit order and a market order, and I will also explain you exactly when you should use a limit order and when you should use a market order. So guys, let's jump straight into it. First, let's start with a market order. A market order is basically an instruction from you to the exchange to buy or sell a certain asset directly at the best available price. So how would that look? For example, let's say I want to long Bitcoin. I want to trade Bitcoin and I think the price is going to go up, so I want to long Bitcoin. And I don't want to wait for that price to come down. I want to be in that position right now directly. That is the moment that I use a market order, which means that directly my order will be executed at the best available order price and I will be in a position. So what are the advantages of using a market order? Well, you are instantly in a position, you don't have to wait, and you have the certainty that you are actually in that position. But there are a couple of disadvantages too. First of all, if you are executing trades with a market order, the fee structure is higher than to that of limit orders. And that is because with a market order, you are scooping out liquidity from the order book, while with a limit order, which I will explain to you in a second, you are bringing liquidity into the liquidity books. So a disadvantage is the higher fees, and another disadvantage with a market order is potentially slippage. But most of you most likely don't have to worry about that. Slippage is when you, for example, you are a big Bitcoin whale and you are selling with a market order millions and millions of US dollars of Bitcoin on the exchange. Then while you sell, you are taking the liquidity from the order book, which is driving the price down instantly. So the slippage means that while you are selling, you're actually selling cheaper and cheaper and cheaper because you are selling, you're driving the price down, which creates a lower Bitcoin price, which means that you are selling your assets for a lower price eventually, if that makes sense. But most likely you won't have that problem unless you have millions and millions of US dollars or you are trading a very low market cap altcoin. So those are the advantages and disadvantages of a market order. Now let's have a look at a limit order. A limit order is basically an instruction from the trader to the exchange to buy or sell a certain asset at a specific price. So let's say the Bitcoin price right now is 20,000 US dollars. I can set a buy order at, let's say, 19,000 US dollars, which means that that order will be in the order book. So whenever the price of Bitcoin meets that limit price of 19,000 US dollars, I will buy at that specific level. But that means that at this moment I'm not in that position, it's just in the order book. I'm not certain that the price will reach those levels. So that is the difference. A limit order is basically an order that will be executed at a specific price, while a market order goes instantly. Now let's have a look at the advantages of a limit order. First of all, guys, it's the fees. The fees of a limit order is lower than that of a market order. So that is already one advantage. The second advantage is that you can anticipate certain price volatility or price swings. So you can prepare already for Bitcoin reaching certain levels without having to jump directly into the price action and opening a position. It gives you a little bit more room to be patient and wait for the price until it meets your limit order. What are the disadvantages of a limit order? Well, the disadvantages are definitely that you are not directly in a position, so you don't have any guarantee if that position ever will be executed. And the second one is missing opportunities. When you don't execute orders directly, you of course can miss opportunities, but that can also work in your favor as you are being patient as a trader, waiting for that asset to meet your limit price can have definitely some advantages too. So let's talk about some real life examples, right? When should you use a limit order and when should you use a market order? I'm going to show you very, very precisely, guys, when you should use these orders. Let's start with a market order directly. Market order, the advantage is directly in a position. You want to be in the action. That is what you mostly do with breakout trading. So let's say Bitcoin is consolidating. Once it is breaking out, you don't have time to place a limit order because the price already goes up and it doesn't look down. That is the moment that you want to execute a market order if you want to be in a position, because you will be directly in a position and then you can take the advantage of the price swing without having to wait for Bitcoin to come down and to fill your limit order. When should you use a limit for order, for example? Well, when you look at the Bitcoin price and you see that there is a clear support at, let's say, 20,000 US dollars, and you think like, okay, when we dip into 20,000 US dollars, I would think so that Bitcoin is going to take off and going to bounce from that support, then you can set a buy order at 20,000 US dollars. You can also do this with sell orders. So for example, when you think that, okay, if Bitcoin reaches 32,000 US dollars, a resistance, I think the price will reverse and Bitcoin is going to go down, then you can put a sell order at 32,000 US dollars and just wait for Bitcoin until it reaches that level, and then your order will be filled. So guys, these are the main differences between a market order and a limit order. If you want to step up your trading game, you want to expand your knowledge, and you want to work on building your own profitable cryptocurrency trading strategy, make sure to check out the cryptocurrency trading course that I have created, where I've helped hundreds and hundreds of students to create their own profitable cryptocurrency trading strategy. For lots of students, this has been life-changing, and it's always important, guys, before you start with anything, always invest first in yourself. That is the biggest asset that you carry around in your life. If you like this video, guys, make sure to leave a thumbs up. That is very much appreciated. If you want to stay connected with me and want to receive daily updates on the cryptocurrency markets, make sure to subscribe down below and hit the bell icon so you get notified whenever I'm uploading a new video. I want to thank you all from the bottom of my heart for watching this video. And yeah, I wish you all a great day, and I hope to see every single one of you in the next video.